So there certainly is a ton of just insane stuff currently happening to Workhorse Group stock again, while also being now up more than 6% as of the last trading day since the recent lows that happened after pulling down almost 47%, however since the incredible jumps of about 130% before. But this certainly isn't the craziest gains we've seen on the stock so far, with all of this actually happening as a sort of recoveries from the pullbacks after the astonishing 7,800% gaps at the beginning of the year. But as there still are some crucial aspects, news and even some short squeeze data that needs to be considered, what we are going to do today is give you an updated insight into what is actually happening to Workhorse Group stock and the also just released earnings report, as well as break down exactly whether it is still a buy at the end. And as the analysis in the video is as always crucial to consider before buying the stock, make sure to stay tuned. Before we jump right in, however, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock, and especially with the new released earnings report as well as the incredible jumps we've seen happening to the stock, there definitely are a ton of reasons for the massive surge in popularity of the pretty revolutionary electric delivery van manufacturer in the US. But despite the strong growth in the financials, which we'll take a look at in a second, there are still also some difficult challenges ahead, especially as the company is also far away from true profitability as of right now. And even in regard to the stock's performance, and this is also crucial to consider for our prediction at the end, we've seen some fairly consistent pullbacks since the recent highs up of course to the now more than 6% gains after the long streak we've talked about earlier. But this also brings us to one of the most insane things about the company, playing a big part in making the stock jump the recent 130% as well as of course the initial gaps as well, some huge hype from especially retail traders. And because the company has been heavily mentioned in forums like Wall Street Bets and in videos like this one, there were a ton of people buying into the stock while simultaneously causing shorts to cover their position, resulting in the price to gap up massively to the recent highs. But one component in particular is responsible for such a squeeze: short interest, which has risen dramatically again as the price continued to fall, making a new short squeeze quite possible once again, with the recent gains might also indicating the start of such a new recovery, also in consideration of the pretty big support level we are currently heading towards. But now taking a look at the earnings as well as the actual business of the company, it becomes evident pretty quickly that Workhorse isn't like any other delivery car producer. Because it exclusively manufactures 100% electric vans with a ton of extra features built in, such as a significantly larger cargo capacity and some very smart tracking technologies, it truly sets itself apart from its competitors, for example. And in regard to the company's new released financials, compared year over year, they also show tremendous improvements in practically every area of the business, starting off with a staggering 1,300% increase in sales of the now delivered 14 trucks. That's some enormous growth when compared to last year's $92,000 profit from literally just one truck, now bringing in a total of $1.3 million. Nonetheless, and we mentioned that a bit earlier, the company is still not profitable, despite being able to lower its net loss by more than 50% this quarter alone. And while there have been some notable jumps now in the last week and some enormous growth in the just talked about earnings compared to last year, the most essential thing for Workhorse right now is still new orders, which continue to be somewhat modest, making sense however given the company's small size. But as e-commerce continues to grow at a breakneck speed, the resulting increase in transportation and distribution makes benefiting from this through an EV manufacturer a really smart and future-proof investment, especially one that might not already be super popular and overbought. And if the tremendous hype from retail traders is actually able to continue to rapidly grow combined with rising short interest, another short squeeze is pretty likely again. Alright, if you like this video and want to support our mission of providing free financial information here on YouTube, please ensure you're subscribed and definitely consider leaving a like. Thanks a lot, and see you next time.